Mihir Vora is with us. He's Chief Investment Officer at Trust Mutual Fund. Mihir is with us here in our studios. Mihir, good to see you. Thank you very much. What a week we've been having, right?
Absolutely. Time for a little bit of a break, I guess.
Everybody's looking forward to this weekend. I can tell you that. I think all of us. Yeah.
We want a quieter market now.
Well, you have the RBI policy today, some more action.
Hopefully not, Mihir. What did you make of all of this? And are things settled now? Because swearing is on Sunday. What from there for the market?
I think certainly because there's no major change of regime per se. So markets were looking forward to policy continuity. And I don't think there are any major business or economic linked items which I think will get, on the go to the back burner or get postponed or stuff like that. Maybe some of the politically linked items may be delayed or whatever, deferred. But from the business point of view, tax point of view, I don't think any major shakeouts, expected.
So it stays business as usual.
Absolutely.
Right? Yeah.
Okay. But here's the other aspect of it. I mean, I was just thinking. So first you had that massive fall. Then you had a sharp recovery because we've had extreme sentiment sort of play out in the market last 2-3 days. But look at the screen today. Now it's kind of flattening out. The only major cue that remains is this FPI selling, which is refusing to let up. So what do you make of the FPI selling if you think that will also sort of start petering off or not? And secondly, I mean, do you expect the market to remain very volatile, or do you think now it will just become boring because you've reacted to extremes and now you just have to wait for some more clarity on policy?
See, market never stays still, right? It always looks forward to something positive or negative. I think one of the reasons you mentioned about FPI, outflows, is actually a positive in the sense that FPIs are probably pulling money out from emerging markets because the US economy seems to be doing much better than expected.
Yeah.
Right, so the services data out there is very strong. Some of the manufacturing linked data probably is not that great, but the services, which is a larger part of the US economy, data is very strong. So to that extent, we have a situation where yesterday the ECB cut rates. Canada, for example, has cut rates. So we have a diverse policy response now going forward. It's no longer a synchronized global cut or hike. The concern is that if rest of the countries start cutting because they are not doing that well in terms of growth, like Europe, for example, and US doesn't cut, will it lead to a stronger dollar? And the stronger dollar typically can mean negative for the emerging markets. So probably that trend is playing out in the minds of the FPIs. The good thing is that unlike 5 years back or 10 years back, the domestic flows have become quite strong, and they are giving a good support to the market. So
let me sort of interject over there and ask you exactly that. If you're working with the assumption that we don't know when these FPIs are coming back, but they're off for lots of reasons, and you numbered out some of them. Can domestic money keep absorbing this kind of selling? Because even at mutual fund level, I mean, if you look at the aggregate flows coming into equity funds, it's been on the decline. I'm not arguing on SIPs, but the net equity number has been coming off.
Certainly. It can, of course, if the flows accelerate, like we saw on Monday or Tuesday, there was a big negative number. So if those kind of outflows continue, obviously we can't absorb it all the time. But if it's normal, outflows, then it's fine because India is getting almost 20,000 crores of net inflows from domestics, mutual funds plus insurance plus EPF, NPS all put together. It's a big amount. So as long as we can kind of keep balancing it out, it's fine. But any sharp outflows, probably, of course, it will impact the market.
Okay, all right, Mihir. So we have, the government verdict that's out of the way right now. We're going to be bracing for a coalition government for the next 5 years or so. How do you realign your portfolio? What are the focus and the defocus areas, in terms of themes? What's worked in the past is capex, railway, defense. Now you don't know which ministries those, who's going to get control of railway and defense in particular. So what will be your focus areas, give and take everything?
See, the focus areas will be the same as before, more or less, physical asset creation, manufacturing, etc. Because I don't think any combination or any coalition would have a problem with growth.
Correct.
Right? If the government previous regime was positive on infrastructure development, Atmanirbharta, defense manufacturing, etc., I don't think any combination would be, against that, right? So as I was saying, the business linked, the sector linked, incentives and the policy measure that we have, I don't see any reversal of that, even if there is some change in the ministries.
Okay, and so what will the, there's FMCG has come back in a big way. As I'm looking at it on the screen, that index has virtually been unmoved. maybe up 5% in the last 1 year, but the next 5% came in this week.
Yes.
Would you be bracing yourself for a higher amount of allocation to say these consumption-oriented names, which are a little bit underowned, and they're trading at par with what they've traded at?
Certainly.
By no means 40, 50, 55 times is cheap, but it's at par at what it's traded at in the past.
Absolutely. So that's a good point, because one of the indications that we got in the last couple of days is that because there was maybe a little bit of decline in the vote share in the rural segments, there might be some refocusing onto the welfare schemes.
Yes.
So that's what the market's trying to guess or double guess. Whether it happens or not, I don't know, but the market's trying to preempt that. And plus the fact that we are just on the cusp of the monsoon, and all indications are that it's going to be a normal monsoon. We have a situation where the rural economy has been, recovering at a rate lesser than the, urban economy, and especially the higher income segment. So the K-shaped is something that was anyway on everybody's minds, and probably the election voting patterns highlighted that a little bit. So you might see some realignment there.
But at an aggregate level, should the investing bias in anyone's portfolio still be capex, economy, sort of front foot forward? Or does it need to be more defensive now?
Certainly, because some realignment will happen, of course, because you had a situation where in the last 12 months, it was all one-sided, right? Everybody was selling IT, everybody was selling FMCG, everybody was selling pharma and all the defensive. And the whole, positions for institutions as well as the retail investors was built along the capex theme, the defense theme, the railways theme. So some realignment probably already might have happened given the, huge moves that we have seen in the last few days.
Just on the flows point, over the last couple of days, it's too early, but for you and for the industry, flows from investors remain steady?
At least I can speak for ourselves. We have seen net plus only in the last few days. Not major plus, but it's been plus only.
Okay, all right, and hopefully it stays that way. Just two areas. One is housing finance companies, and the other is microfinance companies. What is your view on these spaces? On MFI specifically, there are two views. One is that this perhaps state governments will become more populist, and there could be loan waivers and that kind of thing. On the other hand, if there is more money in the system, I mean, repayments, etc., should be faster, and well-run MFIs should benefit. How do you look at that space? Valuations are not very expensive. Stocks have not performed.
Correct. Yeah. See, state governments turning more populist probably is a lesser probability, but stimulus to the rural economy probably is a higher probability. So I would say that given that this segment has been out of favor for quite some time, maybe you can see some re-rating along the lines that we talked about, that market may be expecting some more support to the rural economy.
Housing finance?
Similar, low cost, affordable housing, especially on the affordable housing.
And of course,
side.
I mean, if they come out with something as a scheme once again to push housing,
correct,
that becomes.
So the existing scheme, the Pradhan Mantri Awas Yojana, has been successful.
Correct.
So you might see extension or even expansion of that scheme, and plus some more support to rural as well as semi-urban housing, essentially trying to alleviate some of the stress in the lower middle class and the lower income category.
Just give us a sense of sectorally, what does the portfolio look like for you now, Mihir?
So we haven't really done too much alignment, little bit tweaking here and there along the lines that we talked about. We were quite underweight on the low-end consumption, as we've been talking about. We've been more on the premium end consumption theme. So we've kind of realigned a little bit along those lines, because not trying to preempt any policy measure, but just to de-risk the portfolio when you have extreme in terms of portfolio overweights and underweights. In volatile times, you kind of tend to come closer to the benchmark.
And the best way to do that is two-wheelers or something, or staples, two-wheelers? Or?
Absolutely, exactly.
Just want to point out, folks, that the market has seen a revival. That first dip has been bought, and it's a pretty interesting one, actually. Just put up some of the stocks. The index itself is up about 0.5%. We're trading above 22,900 now. It's no longer IT. We started with the only IT being the green driver. Now, the selling on banks has reduced. I was talking about ICICI Bank being a drag at the start. That's changed. Axis is on the upside of the screen as well, I think. And then quite a few other stocks are getting added to the mix. Adani Ports, 1.5%, ONGC, Tata Steel. So it's not all defensive. You've got some commodity names doing well, oil and gas and metals. There's IT, of course, that's continuing its good show. And some financials are good. Reliance, by the way, Reliance is also contributing on the green side. So the first dip, for what it's worth, has been bought, though the bank nifty is still underperforming. So I just thought I'll put that on the table as well.
All right. Mihir, I wanted your view. Since Surabhi mentioned tech, that as well has been a big outperformer. Now, earlier you were looking at a higher amount of domestic focus themes.
Certainly.
Now, suddenly, if you're going to be factoring in that the Fed goes ahead and cuts rates at some point of time during this year, hopefully, and once the US election gets out of the way, then in fact, history suggests that actually the tech space has done well post that, the last few elections. Would you look at a higher amount of allocation to some of these tech-related names because they're well-run? Some of them are AI-focused as well. And valuations are a little bit of a premium. How would you position yourself? Because actually that's been the big outperforming sector of this week. It's up close to 7%.
So I would say that we still believe more on the domestic economic thing, right? And while tech has outperformed, it's outperformed because it had underperformed a lot in the last couple of years. So when you haven't risen, you won't fall that much, right? Okay. so that's one of the reasons. So there are, I'm not saying that there is no stock pick available in the whole tech space, but I would say if you look at the top 4 or 5 very large mega caps, we are still talking about single-digit EPS growth, right? Okay. So it's not like a very exciting story in the large caps. We rather do some stock picking in the tech space in the mid cap and small cap space.
Okay. All right, Mihir, we'll leave it on that note for today. Thank you so much for joining in. Have a good Friday. Have a good weekend. I think we can all do with a quiet one after what's been an absolutely rollercoaster week.